Traders, today we are going to check this Elliott Wave exercise to show you how to trigger the trade based on the Elliott Wave theory second wave. We are going to go through the step-by-step process to find the entry point, to understand the market reality, to know how to find the end of the wave, and also to understand how to have a strong mind in order to capture the trend, in order to jump into that trade, in order to have a real way of understanding the markets. This is going to be an exercise that you can watch several times, and I promise is going to change your mindset to understand how to properly trigger an Elliott Wave trade. So let's start. All right. Let me ask you something. Have you been in a trade or a setup where you believe that the market, let's suppose that you're thinking that the market is coming here to this high. Let's suppose that's your plan, and the price is moving down into the wave 2, and you start buying, but it takes you out and you have a loss. You buy because the moving average X is crossing the Y or any reason, and you buy and it takes you out 3, 4, 10 times, and you start feeling desperate, and you start feeling bad, and you start feeling frustrated, and you say, no, I'm not going to continue wasting my time, my money on this trade. I'm gone. That's it. I have lost today 20% of my account trying to find the end of the second wave. I'm tired. That's it. Okay, market, you win this one. I have to stop trading. And the next day or the next hour, you come back and you see your chart, and the price is at the target, is at the level that you were thinking. Have you been there? Let me know in the comments, because that's an interesting exercise. Let me know in the comments if something like that happens to you, how often happens to you. That's something that you are dealing with, that you are right with your analysis, but you are having bad executions, you are having bad trades, because probably you are triggering too early or too late, and you are having a huge risk-reward ratio, a big risk-reward ratio, or something like that. So let me know in the comments. Traders, because one thing is knowing the direction of the market. I always tell my clients, one first step is knowing the bias, which side of the market you want to trade. Once you find that out with the Elliott Wave theory, that's not enough. The second step is finding the speed of the market to confirm the corrective leg. We are going to go through that step, and of course with a good context, and everything under the frame of proper money management, under the frame of a good trading psychology and other things. But these are the basics, because it's impressive how traders waste their times applying things that don't work, losing a lot of money. It's crazy. But what if you can have a simple setup that you can start seeing results, and then you start working on making that better? That makes sense, right? Listen, let's go step by step. I want to share with you this report that we were, let me change here, that we were working here with this week on, actually from last week, on silver. This is a great example. So we have a membership on Elliott Wave Street where we publish the bias on several markets, forex markets, some crypto markets, stocks, and futures on a daily basis. So this is a great example. Look, we have silver, and our main mission was finding the end of the second wave. That was the mission here. But Sometimes the trader says, okay, good, but why you didn't trigger here? Or why you didn't buy here? Or why you didn't buy here? Why you didn't buy here? Or did you buy here, right? So the question is, okay, yeah, we know that the second wave, it's something interesting, but how to trigger the second wave? How to find the end of the second wave? Then you try filling out your chart with Fibonacci levels, and they can give you some guidance. They can give you some key areas, but at the end, that's not the answer. That's not the answer. So this is the exercise. We have a bias, right? We have a bias. The plan is getting here. So let's go back to the chart and let's go through the step-by-step process. One of the things, traders, is that when you start seeing the price rejecting, we can start buying. Actually, this could be a buy trade. That one looks good. And you can have a 1-to-1 risk-reward ratio. If you leave your protective stop loss here, you can have a 1-to-1 risk-reward ratio to at least move your stop loss to break even. In the membership, we teach different techniques to protect your trade once it reaches a 1-to-1 risk-reward ratio. Then, here the price sell-offs strongly, so here we don't have anything. It's a fast leg. Then the next one will be here. So the next attempt will be here. If it takes out your stop, here, for example, you wait for the next one. We have the price moving up in a corrective leg, and we have another one, right? And here comes the next setup. So some trades during nobody knows. The point is that nobody knows precisely where the second wave is going to be over. But when you execute near the lows, when you can execute near the lows, you are going to have only 1 or 2 stops. That's it. Because the others are going to give you break-evens. But of course, you need to learn to execute and to understand that is part of the process. Look, this is going to change your life forever. Let me know in the comments if this is something that you find useful, because at least for me, it was a big moment when I started to understand the process. When I was learning the Elliott Wave theory, I have been trading over 15 years professionally, and when I was learning the Elliott Wave theory, I imagined that once I become a master on Elliott Wave, I will be able to say, okay, this is the wave 1, so I'm going to buy limit here the wave 2 because the price is going to go there, and then I'm going to sell that position precisely at this level, at this Fibonacci ratio, and then I'm going to buy again here during the wave. That was my thinking about the Elliott Wave theory, about trading in general. And after so many frustrations, after losing money, after a long journey, I found that that's not possible, that nobody knows. So this is what you expect, and actually what you get is that you have your wave 1, and the price starts moving pretty erratic and chaotic, and you are going to deal with this, and the market is going to test your psychology, and is going to try to take you out several times until you start feeling desperate and you start making crazy things, like increasing the size of the trade in the next time to recover, like maybe not using a stop loss, all the mistakes, right? So actually, traders, that's a crazy world, and I have been there as well, of course. But that's why I'm sharing this with you, because I think that more than teaching how to label the waves, something that comes with more value is sharing with you my experience in these type of cases. So actually, traders, what we need to do, the right way of doing things when you are trading is finding your setups near the lows when they happen. Of course, you are going to add some filters so to filter out some of these trades, because you are going to measure momentum and you are going to add some things that are going to help you filter out some. And the ones that you trigger, some of them will have a break even. Some of them will have the stop. But you reduce the risk a lot with this process. And once you jump in the actual one, it could be there. Here we can have a good rejection. Here we have something that we call the change of behavior. Here we have the test of that change of behavior. You can learn with us this step by step. We have a fantastic library of education. We have the impulse, we have this rejection, and we have this rejection. So those could be the entry points. But don't forget that the bias is to the upside. The plan is to get here. That's our mission with the wave count. But in the real life, you have to deal with the entries. You have to deal with to place the stops close to the price. Because listen, imagine this trader. Usually the beginner says, okay, I'm going to trigger at the X level, and I'm going to place my stop loss 100 or 200 points because I know that the market is going up, but I don't know if it's done. So the price has been moving up, and I want to buy there just in case I'm going to leave a protective stop loss here. And this is your risk. So in order to make at least a 1-to-1 risk-reward ratio, the market needs to cover a lot of points. And that's extremely risky because these things can turn around at any time. So you need to have, versus, let's say, a professional that has the same movement, has the same leg, and buys here, and leaves the protective stop loss here, and here is his risk, let's say 15 points. And when the prices moves slightly here to the previous high, the professional already booked the 1-to-1. And if you have a home run, you can make a 1-to-10, even taking partial profits. So, of course, something that you need to work hardly is having small stops to increase your risk-reward ratio. If you are trading with huge stops, you are not going to make it. You're wasting your time, you're wasting your energy, you're wasting your money, you're wasting your dreams, you're wasting everything. There are many things that you can change easily in your trading, and your trading will change forever. So these are market realities, right? And once you capture a trade like this one, you can recover from any losses, of course, because those are tiny. You have to, when you lose nothing. When you make money, make good money. That's it, at the end, that's it. So, traders, this is the process. And as you can see, there are many little details. There are many things that we cover on a daily basis on the membership, where you are going to learn the step-by-step process to trade like a pro. And one interesting part of the membership is that the membership is not one of those courses, because I have been taking those courses as well, that they tell you, hey, look, this is the EMA 1 that moves like this, and this is the EMA 2, and once they cross each other, buy. Or when they cross down, sell. And do that, and you're going to make money. Yeah, sure. Of course not. You know why? Because actually, in order to make money in these markets, in order to be successful in these markets, what you need to change, what you need to learn or change is your mindset. That's where the trouble is 99.9% of the times when the trader is losing money. In his mindset. So the first step is to detox from all these previous concepts that you have, because if things are not working for you, it's because you have a lot of issues in your concepts. And when you clean your mind, that's the first process that you start having that detox with our system. When you clean your mind, you are ready to start developing a mindset as a professional, as a real trader. Not trading on hope, not trading on forecast, not trading on the future. Nope. Trading on the present, understanding what's happening at each candle, and making decisions based on the reality of the market, on what is happening right now. And this is so fantastic, traders. I love trading. I love teaching. I love researching. That's my life. I have been spending my whole life in this world, in this industry. And you are more than welcome to be part of our group. You are going to change your trading forever. So here on Elliott Wave Street, this is a project that I have been working for many years. On the membership tab, we have a special $19 the first month to change your trading. Is not that a good offer? Yes, of course. You pay just $19 on the Forex, the stocks, or the full access plan. You get immediate access to the education library, to the live market analysis, to the Discord server, the community that we have inside. And you are going to change your trading forever. Forever, right? So join us now, and I'll see you in the next market report. Have a fantastic week. Take care. Bye-bye.